All transactions were inclusive of VAT at the rate of 16% where applicable. So he said where the transactions are inclusive or where prices are inclusive of VAT, it means that the quoted price is equal to 116%, which is split as 100% being the selling price and 16% being the VAT that is being collected by the business and forwarded to KRA. So this is what it means. So to get the VAT component, we said you are going to take, so you can have 116% is equal to the quoted price. So how about 16%, which is the VAT that you're seeking to compute? So you cross multiply. So you will have 16 over 116 times the quoted price. Now the quoted price is like, for example, the first one, they purchased 10 cameras for a total of 500,000. That is the quoted price. So that 500,000 is 116%. And you said it split the selling price and the VAT. So we need to compute, because in the VAT account you're only considering VAT, we need to compute 16 over 116 of the quoted price for us to get the VAT. Now we had said earlier that for the VAT account there are two sides. There is the input side and there is the output side. And it said the output is corresponding to the sales and the input corresponds to the purchases and the other expenses that and inputs that the business may have that they've already paid tax on. So let's go through the question again and discuss how we treat each of the transactions. So September 1st, purchased 10 cameras for a total of 500,000. So we need to get the cost per camera. So the cost is the total cost 500,000 divide by the number of cameras that they bought, 10, that gives us 50,000. So we can have it somewhere. Cameras is 50,000 per unit. The second one, on second, purchased flash bulbs for a total of 200,000. So this is a purchases. The first and the second one are purchases. And you said that when you have purchased taxable supplies, you're going to pay VAT to your suppliers. And since purchases are part of the inputs that you need in the business, that is going to be input VAT. So you know, on 4th of September, purchased slide projectors for a total of $1 million. So again, we are purchasing, that is an input. We are paying the tax, VAT, to our suppliers. So that goes to input VAT. 6th of September, sold 5 cameras, each at 35% above cost price. Now, the cost per camera is 50,000 shillings per unit. So if we are going to sell, so selling price of a camera at 35% above cost, at 35% above cost is equal to, so we had bought, that is 150,000 is equal to 100%. So what we want is 135%. So we have 50,000 times 135%, or 1.35, which gives us 67,500. 67,500 per unit. We are now on, so we are selling. Now that we have sold, we said the VAT that you collect from your customers is output VAT. So those sales of 5 cameras go to the output VAT. On 7th, purchased 200 wristwatches at 1,500 each. So we also need to know how much we incurred or how much was we paid that day. So the number of wristwatches bought is 200 times For each of the watch, we paid 1,500 shillings. That gives us 300,000. So we can just indicate against the question that we have for the wristwatches, we have 300,000 that we have spent on that day, inclusive of the VAT to our suppliers. Then on September 8th, sold 2 slide projectors for a total of 500,000. Sales, we're saying, is output VAT, so that will be output. Then September 12th, sorry, purchased 50 stopwatches for a total of 50,000. So per stopwatch, we incurred 50,000, and for that we got 50 watches. So we have 1,000 each. So we can just indicate for the watches it is 1,000. So we can have it here, wristwatch. Cost is 1,000 per unit. So because we are buying, that is input VAT. We are now on September 9. Sold flash bulbs that had cost 100,000 for 150. So when we bought the flash bulbs, we already indicated that as input VAT. So what you're going to account for in this transaction is the 150,000, which is output VAT. Now for this question, if when you take 100, we had bought it, the cost was 100,000. Attributable VAT is the cost is inclusive, so it's 16 over 116 times 100,000. That is 13,793. 13,793. And you're selling at 150,000. So 150,000, that is inclusive of VAT, so times 16 over 116 gives us 2689.6, or 20, this was 0.1. So the difference here, the value that you've added, in the previous class we said that the value is added by a business even by storage. So you could buy an item, you don't do anything to it, you just keep, so that when the customer or when the demand arises, you can be able to sell. Even that storage, you said, is creating time utility. So these people, they bought at 100, kept it, sold it at 150. So the value that they have added is 50,000. Now this value that is added, we said, is what we are going to tax. So we are taxing 50,000 times, it is inclusive, so it is 50,000 times 16 over 116. There is 6896.5. 6896.5. So if you take the output, which is 20, so if you take 20, 2689.6, which is what they have collected, they collected 2689.6 minus, they had paid 13,793.1, you get 6896.5. So what this proves is that, you see, the value, the difference is the value that they have added, the 50,000, and on that they are supposed to pay VAT on it. And because this 50,000 is inclusive of VAT, it is 16 over 116 times 50,000, which will give you 6896, which is equal to output VAT minus input VAT. So output VAT is 20, input VAT is 13. So you take that, this is output This is input. So you get the same 6896.5 because the value that we are taking 16 over 116 of the value that they have added. So that was September 9. Then September 12 purchased 50 stopwatches for a total of 50,000. It's 1,000 per stopwatch. 15th purchased 100 alarm clocks at a total cost of 80,000. So we take the cost of 80,000 divide by, they are 100. One is 800. So the alarm clock is 800. Cost 800 per unit. We are having the unit cost because we will later sell. Then that takes us to, so we are purchasing, that is input, VAT. We are now on 18th. Sold the remaining 5 cameras each at 25% above cost price. We had bought the cameras at 50,000. We sold the first batch, 5 of them, at 35% profit. Now the second one is at 25%. So at 25%, we shall take 50,000, the cost per unit, times 125%. 100 being the cost, and then the profit of 25. So we get 62,500. So we are selling it at 62,500 per unit. That means we have reduced the prices as the time goes. Then because we are selling, that is output, VAT, that takes us to 20th. On 20th, they sold 3 slide projectors for a total of 750,000. So because this is a sale, this goes to the output side of our VAT account. Then on 22nd, sold 100 wristwatches at 2,000 per watch. So they're selling 100 at 2,000. That is 200,000. That is what they collect. That is output, VAT. Sold 70 alarm clocks, each at 30% above cost. So alarm clock, one, the cost is 800. And like we had computed earlier, and they're selling 70. And the rate is 30% above cost. So we will take the cost times 130%. The cost is 800 times 130%. That gives us 1040. So the selling price here is 1040 per unit. So they're selling 70 of them. We'll see how much they have collected. That is output, VAT. Then on 27th, sold 50 stopwatches for a total of 75,000. There's nothing to compute there. We just take that to the output, VAT. Then September 29, paid electricity at 15,000. Electricity is an input into the business and it attracts VAT at 16%. So they paid 15,000 to the supplier, Kenya Power, and that was inclusive. So that being an input goes to the input side of our VAT account. September 30th, they paid rent of 20,000. Now, Meta Limited is a company and they are in business. Whenever we have 2 types of rent, like we covered that in the taxation of incomes from property. That whenever a taxpayer is for a landlord, you can choose to develop a property and for it to be either commercial or for it to be residential. Now, residential rent is not subjected to VAT. That is why if you pay rent, you're going to pay just the amount that is required, no VAT, because it is outside, it's exempt from VAT. But commercial rent is vatable or it attracts VAT. That means on the commercial property, on like for Meta, they are paying rent for their premises in which they are undertaking their activities. So that attracts VAT. So this is input VAT. Then motor vehicle repairs is 10,000 for business. We said that for repairs, when you're repairing vehicles and when you're repairing the oils, servicing, parts of vehicles, you will not be able to deduct input VAT unless those vehicles are used in the supply of taxable goods, or they are facilitating the supply of services. So for this, there is what is written in brackets that it is for business. But generally we said when you have PSVs and when you have personal vehicles, even when they are owned by the company, the servicing and the repairs and the fuel and oils for those vehicles is not, though you're going to pay input VAT, you're not allowed to deduct from output VAT. But in our case here, Meta Limited paid for motor vehicle repairs 10,000 shillings, and this vehicle was for business purposes. That means that the vehicle was being used in the supply of taxable, in the making of taxable supplies. So we are going to deduct input VAT. Then telephone expenses, they attract VAT, airtime or landline, it's going to attract VAT, so that is input VAT. Catering expenses, he said, unless you're a hotel, whenever you pay VAT on accommodation and catering, you are not allowed to deduct that from the output VAT. So though they paid input VAT on catering services, they are not allowed by the commissioner. The act does not allow them to deduct input VAT suffered on catering expenses. Audit fee attracts VAT, and that is an input. So that is input VAT. All transactions were inclusive of VAT at the rate of 16% where applicable. So we are saying we're going to use 16 over 116 times the value of the transaction. Required. Calculate for Meta Limited for the month of September 2017. We said we are adopting that from 2014 to 2017. We calculate input tax, output tax, and VAT payable or refundable. There are two ways of going about that question. We can prepare our VAT account, which will give us the total input and the total output, or we can do the individual transactions. We are going to use the account so that you can be able to determine the total payable or refundable.